Okay, so a very good afternoon to everyone and welcome back to day 2 of Digital Money 2020 organized by Payments Council of India. I would quickly like to take this opportunity to thank our partners, our title partner Lyra, our powered by partner PhonePe, our agenda partner PayPoint, our payments partner PayU, our gold partners Visa, Freshworks and AWS, our silver partners Zeta and Paytm, our knowledge partner PwC, and our design partner Ethanos Digital. Wow. So without further ado, I would like to commence with our next session. Our next session is a panel discussion on the topic, building a payments business for the next decade. And for the same, I would first like to welcome our moderator, Mr. Madhusudanan R, founder M2P Solutions. We welcome you, Madhu.
Thank you. Great to be
And
here.
I would also like to welcome our esteemed panelists, Mr. Abhinav Sinha, co-founder, Echo India Financial Services, Ms. Deepti Sanghi, founder, Kodo, Mr. Abhishek Arun, Senior Vice President and COO, Paytm Payments Bank, and Mr. Murali Akella, Chief Executive Officer, Rational FX. Thank you for joining us today. I would now request Mr. Madhusudanan to please take over. Thank you.
Thank you so much. Good afternoon, everyone. It's a great day to be here talking about the future of payments. I think as a country, as an ecosystem, we are at an interesting sort of phase where we've had like a decade of rapid growth and all kinds of product innovation that has happened. And we are getting into the next phase of growth, which is aided by a larger sort of ecosystem participation around data and around how some of the good work that has happened over the last few years is going to sort of companies are looking to sort of build on it. India is a torchbearer, if I were to sort of use that term, as far as payments is concerned. A lot of markets look up to India, and this has happened rapidly over the last 4 or 5 years, right? So I have in the panel today an interesting set of panelists who cut across the sort of ecosystem, if you will, right? I'll start with Abhinav, who represents Eco, who's been doing a lot of work on the ground, from an inclusion perspective to having a broader API. And before neobanks became a fad, they have been doing a lot of the neobanking work. So great to have you, Abhinav, as part of the panel. I have the true blue neobank represented by Abhishek Arun from Paytm, who's probably going to sort of talk about and share his experiences. We also have Deepti, who is sort of building out a fantastic product around Kodo, which is focused on the SME, which is probably the next mountain to sort of capture as far as fintech and innovations are concerned. And we have Murali to sort of talk about the cross-border play. If I get that right, Murali, I'll probably let you sort of explain and talk about what you do. Maybe why don't we just go around the table introducing ourselves for a minute, and then we'll sort of get into the session. Can we go with Abhinav first?
Thanks a lot, Madhu, for the kind introduction. It is true that I started Echo in September of 2007. It's been 13 long years, and we've been witness to all the policy regulatory changes that have happened over the last 13 years. And it is absolutely fantastic to see how beautifully payments have evolved in India, and the time is only getting better. As far as Echo is concerned, we are India's one of the largest fintech players who operate in the cash to digital space. We cater to consumers who are low to moderate income customers who are primarily earning and spending in cash. So we kind of take the burden of converting their cash into digital and kind of introduce the digital ecosystem to them. I've been doing this for the last 13 years, and I see this space growing. Madhu, over to you to pass it on to others.
Yeah, Abhishek, if you can introduce yourself.
Sure. So my name is Abhishek Arun. I work with Paytm Payment Bank. So I started my journey with Paytm on the payment side and now moved to the bank. So Paytm, as a lot of people would be aware, is the largest mobile internet ecosystem in the country with upwards of 300 million users and about 17 million merchants. So it's a consumer and a merchant play and a very, very user-friendly app which powers all kinds of transactions and all kinds of payments. And look forward to this session.
Great. Deepti, if you can introduce yourself.
Sure. Hi, I'm Deepti. I am the co-founder and CEO of a fintech startup called Kodo. We offer corporate credit cards and vendor payments platform for Indian startups and small businesses. So we are probably the youngest of the lot. We went live with our product in December 2019. And over the last 7 months, since the pandemic has been affecting businesses, on the strength of a lot of businesses moving their business online, we are seeing massive traction. We have grown almost 15x in the last 7 months, largely because our payment instruments are helping companies who have set up their online stores to drive traffic using our cards for online ad spends, various IT tools. So businesses basically use our cards for everywhere they need to use a credit card for online spends, and also they use our credit cards for vendor payments. So this helps them streamline all their expenses in one place. So, yeah.
Great. Murali?
First of all, I should say thank you so much for having me here. I feel absolutely dwarfed with the achievements of the other panelists, to be quite honest. I joined Rational FX in February this year as chief exec. My background, when I first started off, I was a developer. I worked with Accenture, and soon decided I shouldn't be one. It was quite dangerous for me to be so close to the code. Then I moved to Standard Chartered Bank in Singapore. I spent about close to 6.5, 7 years there in their global HQ, multiple roles, but mostly on the payments and on the interest rates derivative side. Then moved over to Standard Chartered's London office, where I worked in the private equity side for a couple of years. Then got an MBA, and after that, I joined a firm that one of the alumni from my school had started, TransferWise. At the time, it wasn't the beast that it was. It had close to like 400 sort of employees. So I joined, and I led their banks business for basically starting it, growing it, and sort of building a team around it. That was until last year, end of last year. And right now I'm with Rational FX. So it turns out I'm the group chief exec as well. We have two sister companies. RFX basically helps primarily financial institutions and small and medium businesses. We are an FX firm first and a payments firm next. And therefore, we do spot, forward, and most risk management solutions that businesses seek. We also have another company called Zenpay. This is basically an equivalent to TransferWise, if you will. So we help individuals send small amounts of money home from wherever they are to their destination countries. We were the pioneer of a pricing model in the market called Pay What You Want, and has been featured as a case study in many sort of business schools as well for actually being sustainable. So, happy to share thoughts around that as well at some time. But thank you for having me today.
Great. Yeah. So I'll probably spend a minute introducing myself. I represent a company called M2P. We are a fintech and a payment enabling and an infrastructure business. We work with banks on one side and businesses and fintechs on the other side, covering their whole payment products and infrastructure play. We've been around for a while. Prior to this, I used to work for Visa. I was part of the products organization for South Asia and Visa, leading some of the products. And before that with Citi, in all about 15 odd years in experience in the payments business. As Abhinav said, we've seen this. I've personally seen the evolution of the payment business from the way the policies were drafted in mid 2005, 2006 to where we are today. It's fascinating that in one sort of a decade or so, India has sort of transformed in the way how payments business have happened, which sort of takes me to the first question. Abhinav, if I can come to you first, is around the fact that there's this common notion that today if there is no money in payments, it's a loss leader. But you have operated in a segment where people have never actually, shied away from paying for convenience or getting that service done, right? So it's a very different world compared to the world that we are all in, where service delivery was a lot more important. Timely, credit of that money was super important. How has this changed over the last, 5-6 years, or maybe even more since you can go back a lot more into the time? So is it really a fact that across the value chain, you feel that there is pressure on, monies to be made in the payment business itself. That could be a good, segue to start the conversation.
So, thanks for asking that question, Madhu. First of all, we do operate at a segment, and let me just take a minute again. We operate 80% of working Indians continue to earn in cash, and this is because 80% of Indian economy is built off these small MSMEs and SMEs who work, probably completely or partially in the informal sector. And as a result of which, close to about 400 million people in India get their wages in cash. And so we do provide them basic banking services to start off with, which is opening of a bank account and doing deposit withdrawal. And you're right that, because we provide convenience to these guys, and this is convenience that can be felt. This is genuine convenience. And as a result of which, what happens is that there is an opportunity to charge in a few transactions. It's not that all these transactions can be charged to the end consumer. There are a couple of transactions which do open up an opportunity to have a fair kind of a transaction fee income. However, let's say a transaction was a margin of $10 way back in 2015. Probably that's gone down to $2. So it's not that we are not under pressure of margins and things like that. I think it's a similar story, but I think because it's a very distinct customer segment where the journey starts with cash, as a result of which there are a couple of different opportunities here. But largely speaking, large opportunities like cash in, cash out, where a lot of these consumers need these kind of transactions because the market size for these transactions are very big. The margins aren't too high, and therefore one is really need to run the operations in a very, very people-less, paperless manner. So we kind of have this mantra within the organization to be people-less and paperless. And I think payments kind of forces anybody and everybody to be as agile, as slim as possible.
Sure. Yeah. Interesting. Abhishek, if you look at how companies have been forced into, just to take on what Abhinav said, to sort of look at adjacent opportunities to actually make money or strengthen the core business itself. Paytm has been at the forefront of trying a number of this. The first to actually get free for merchants, and then you brought back pricing. I think recently you've sort of made it free again. Is this sort of cohesive strategy to build merchant first, get the merchants on board, provide a larger sort of financial marketplace so that you could look at making money at a customer level, or is it still sort of test and learn and evolve sort of phase? Because there's no other company that operates at your scale where you could test many of these in silos and actually get some some modeling around it. The reason why I asked that question is that today, the whole aspect around making money on pure pay payments is no longer the edifice, because a number of companies are coming in, or rather UPI has forced companies and incumbents to actually look at money beyond the payments business itself, right? So any thoughts on that and how you're looking at it organizationally?
So I think there's been a journey here. So there is a journey where payments were standalone, making money. Then payments became an enabler. Today, in some form and shape, payments is also a public good, which the government wants to have a large say in it, whether through UPI or whether through various policy interventions. So payments from a revenue generating source is now part of public policy to impact a larger society. So one is that trend which we should be cognizant of. And in India, large stakeholders and the government, so to speak, realize the importance of payments and the seamlessness of it. This is very different from a lot of other businesses. That's one.
Right.
What has also happened in the last couple of years, if you look at it, business models have changed. So business models of people did not understand what Uber's business model was, and if they don't make money, they make money. How will that work out? Those business models on data, on sitting on top of it, lending or some of the other elements have also kind of come up, and those are also work in progress. And the third element is around the ecosystem play, which again has happened in some of the other countries, maybe China, but in India it's again working out slightly differently because it's not a walled garden. At the end of the day, an ant or a Tencent is a walled garden situation, which again can't happen in India. So that change has also happened. To come to your point about whether payments can be profitable standalone. Yes, it can be. It depends upon which area you want to play your game in. Is Visa profitable? Of course it is. Is it in the payment space or is it in the network space? Everybody is talking about that in their own manner. Margins are definitely under stress in the payments business. Payments is not a one or two monopoly scenarios. India will have 5 or 6 players in the payments business. So in the 5 or 6, logically the pie gets divided. So standalone you may not make money, which is where associated benefits and associated things come into picture. Um, our journey is started from a payments to commerce to banking to financial services and a whole ecosystem of it, because you have a large consumer base and you have a large merchant base. So you're not really depending upon UPI or wallet or A or B or C. You're saying that, okay, this is the consumer base, this is the merchant base you want to solve. Somebody else could come in and say that I only play the consumer game, or I would only pay the payment gateway game. So then there are niches in that particular piece. It's each person to their own in terms of how large you want to play this game, how wide you want to stretch, and where do you want to kind of focus. So I think each to themselves, but very, very difficult standalone to make payments profitable unless you have associated moats available or you own the consumer, because there is some player which is coming every day and saying that, okay, I will offer this at a particular rate, coupled with government intervention.
Yeah. Interesting. You sort of made that comment where we have, we have a lot of companies that are saying we will lend based on the data that is getting generated out of the payments. We've not seen a lot of them scale. Deepti on the other side is lending and then using payments to actually sort of underwrite them better. But do you see any adjacent opportunities, just to sort of extend your thought? We don't see a lot more work around loyalty or any of the other adjacent opportunities operate at scale. Is this the market maturity, or is this a thing that companies still don't believe that there is value? Because if you look at loyalty, for example, beyond jet privilege, when they existed, and maybe shopper stops to some extent, we don't have a large loyalty business in India, right? And payments is a great hook to get loyalty sort of going. So everybody sort of is gravitating towards lending, but do you see other areas getting the right focus and sort of technology investments to be sort of harvested and grown, or is that something that you guys are trying to do at Paytm? Any thoughts on that?
Lot of options. So, for example, let's pick up something like transit. That is commercially viable today, is positive. It'll probably make as much in an ad valorem percentage sense close to what lending would make with no risk. You look at loyalty. What people don't know is that, for example, Paytm would allow a small kirana store to have his gift voucher only applicable in that particular shop. If that particular merchant wants to send text messages to anybody in that pin code about a promo they want to run, they can buy a pack on our platform. So those are additional pieces which people don't really are aware of, because which generate subscription revenue, which is the classical SaaS model. And what we need to also understand is, in the last 2 years, as the VCs keep changing and meandering from lending to SaaS to API banking to banking as a service, people's conversations change, but essential business remains the same. So you need to figure out which client you want to serve and what's your moat and what is the value add. But there is a narrative which keeps changing depending upon what's the flavor of the season. The flavor of the season today is corporate credit card. So every merchant is trying to do a corporate credit card in partnership with some form and shape. Merchant cards. It's not very easy. The challenge, the other point which nobody asks is scale. It's very difficult to scale, and this entire conversation, I'm actually moving to the next part, which is this entire conversation about fintech working with banks. The fintechs bring in their risk parameters and their understanding. The banks come back and say that I have the distribution power, so I should get all the benefit. It becomes very difficult. How do you scale? So unless you have scale in lending or corporate credit cards, some of these things, it becomes very difficult for new age players to scale, because it is tilted in the favor of bank. We are a bank, so we do know that what's in our favor, and we have what licenses we have and how difficult is it for a very, very smart entrepreneur to come in and say that, so the question is, who owns the customer? You have a neobank, you have everything, but who owns the customer? Who will cross-sell? So if you're acquiring and if you're building distribution for a bank and then handing over the customer and making some money, becomes very difficult.
Yeah, true. Yeah. Deepti, if you want to sort of give your perspective in terms of how you're looking at lending and then, leveraging the payment data that the lending stack generates, how are you thinking about it? What are you seeing as early traction and how are you building this for the future?
Sure. So when I look at so credit cards, right, are basically bringing the best of credit and payments in one instrument. And when I look at credit, I'll view it as grease to let the business payments flow seamlessly, right? And I mean that's the hat I wear when I look at credit. Now, if you see how this ecosystem has been evolving, there's a lot of work that's been done on the acquiring side of the business, right? So be it physical POS or merchant acquirers like Pine Labs or now Paytm or Bharat Pay, and in the online world, all the payment gateways, right? So they're making it increasingly easy for businesses to accept non-cash payments, right? And of course, there has been, I mean, even though a large part of the economy is still cash, but there is a trend, which I believe is there, driven by a lot of events like demonetization, GST, and now the pandemic-related fears around cash. There is like, for example, there is a family friend who runs a retail garment shop in Roorkee. Told us that pre-pandemic, about 30% of the business was through cards, or basically, let's say 70% of the business was in cash, right? And now 30%, that's gone down to 30%, right? Because people want to pay through, let's say, a Paytm or a Google Pay, etc., right? And so now on the acquiring side, as the businesses are getting formalized, on the payment side, right? Now, if a business has to make payments, that is where earlier they would love to pay by cash because they're getting paid in cash, right? Now they need to find the right instruments to pay in a non-cash way. And as a business, requirements are shifting more towards places where you need a card instrument, let's say for buying office supplies or let's say raw material on online platforms, or let's say even for your online spend subscriptions. There, the need is rising rapidly. Now, and that's where, and let's say, let me give you an example, which may not be the right thing in the current environment, but as the travel restrictions open up, that will be super relevant, is that earlier, these businesses were using travel agents to buy their travel ticket, and they would pay them after a month, and they would get that credit period from the travel agent, right? Now, a lot of people find it much easier to just book tickets online on a clear trip or make my trip. Now, they still need that credit period, right? Businesses always run on managing their receivables and payables. So a credit card is a beautiful product that offers them without any interest, right? So that is how I see that, when you look at business payments, credit has to be embedded into that to help them manage their receivables and payables. And when it comes to, it's not just that, okay, just giving credit is not enough, right? So when a business makes a payment, there is a compliance exhaust that comes with it, right? Around the TDS that you deduct, the GST that you're paying, and then making all those tax payments. So all of that has to be, and the accounting entries, right? So it's not as simple as a personal credit card where you just make a payment and you're done with it, right? So there is a need for building all of these compliance tools around every payment that a business makes, right? So that gives one a lock into, and that gives one a lock into helping them manage all their spend side. All the receivable side is being managed by, you can look at payment gateways and POS providers. And the spend side is still something that is yet to be solved for, right? In the rapidly evolving dynamic that we have. And when it comes to credit underwriting, right? A classic thing like a credit card. When you speak to any underwriter, they see that, hey, I want to see the end use of my credit, right? I don't want you to go and speculate in the market or real estate or you have to have a legit end use. Now, credit card allows you to track that, right? So it's also a risk management tool in that sense, right? So that makes it very powerful.
Yeah, interesting because India, larger credit card, while credit we are not underpenetrated, credit card as an ecosystem on the consumer side, we are super underpenetrated, like topping 40, 50 million consumers. The corporate side of it is even poorer, right? So it's not even as a product exists. I think collectively between the large banks, we probably will have like 100, 200,000, corporate credit cards. That opens up a large opportunity in light of what's happening at a sort of public good ecosystem level, changes that are happening, whether it's GST, the data footprint that you have around that, or the OCEN framework that is sort of coming. We'll probably sort of touch on that. I'd love to hear your thoughts around that as well. I'll now probably sort of look at the cross-border play and want to get your thoughts, Murali, around how you guys are looking at and FX and the fee incomes associated with the FX is one of the most profitable sort of channels as far as banks are concerned, right? And disruption in this space has been sort of playing out for the last 5-6 years. I think TransferWise and the likes, kind of took the first chip. And it continues to evolve in markets in different sort of forms. There is a B2B aspect to it, there's a consumer aspect to it. In a market like India, which probably receives 80-90 billion dollars, the profit pools in itself is like, is in the range of $3 or $4 billion in terms of cross-border money flow on the consumer side. So what changes are you seeing both from a consumer habit standpoint? Are people willing to trust a low cost sort of channel vis-a-vis a bank channel? Because when I send money from, let's say, my DBS bank account in Singapore to my ICICI account in India, I know for a fact that the money is safe, right? If there's an online platform that sort of does a Google ad and shows me a platform that saves me $10, are consumers ready to take that plunge, right? Because that's the is that trust factor, and how is it playing out? Would be curious to know.
Yeah, I think I'll echo the words of Abhishek, I think, who said before, we don't have a choice. Like, the more, digital we become, the more app-driven behavior consumers tend to exhibit. I think, trust is almost like, they will trust you with, initially small amounts of money and then scale it up later. But then once you do that, a very dangerous thing happens, right? I mean, do you remember how much you paid for the first app that you ever bought on that lovely touchscreen iPhone? Must have been $10. How many apps do you even pay for today, right? I mean, 90% of the apps on your phone are free. Why is it any different if someone's moving your money from one place to another? So what we're witnessing is an absolute need and, a market trend of price, sort of deceleration. It will come down massively, right? There is no way out of it. The only thing is people who are able to wade through and survive that whirlpool of price compression, those are the guys who will survive. That brings me to the second point. You can reduce prices with several ways, right? I mean, you can either rob Peter to pay Paul from your VCs, or you actually innovate on operating models, right? I mean, and there is so much scope to do so for cross-border payments. I mean, until 2012, 2013, I think almost 90% of the cross-border players in the world were still using SWIFT, right? The age-old method that was conceived and developed in the 60s. Frankly, from then to now, in the last 8 years, we have seen huge amounts of innovation in how, money movement mechanisms have evolved cross-border, whether it be for pay and whether it be for FX execution, back-to-back hedging, um, transaction monitoring, fraud discovery, sanction reporting, everything, and that basically led into the last culmination, if I will, of the TransferWise model, which is the local liquidity pool method. Basically, it's Hawala, but massively regulated, legitimate, and safe. So it's like you pay if I'm sending my money from my Monzo account to your account in ICICI. TransferWise, for example, takes money from my Monzo account into its GBP account, then takes money from its INR account, wherever it's sitting, and sends it to you in ICICI. Now, both these are local payments on both sides of the fence. They're cheap, super fast, nearly instant, and they're incredibly convenient to use, right? So if those three are the product pillars on which you base your operating model on, you obviously are going to see a massive improvement from the previous models. So the operating models are slowly becoming extinct, and that's, I think, a ripe area for bank fintech partnership, which is probably where I also differ with Abhishek, because who owns the customer is important, but which bank has the ability to spend years going out and opening accounts in 30 odd countries, right? When somebody else has done it for you. So I'd rather think of it as let's a bank can probably say, I don't want to build the pipes, but I want to build the rate at which I'm monetizing my customer base. Depends on what they are prioritizing. And then the last bit, I think, which you asked for. Look, I think money movement is becoming a commodity everywhere, which means that everybody needs access, both customers and the market players. Around the world, like in Australia, in the UK, even in the US these days, non-bank FIs are getting access to previously concretely held systems, which are like clearing, like having access to the faster payment scheme, having access to BSB in Australia or to NPCI. These things are like super important where, please conduct tests, right? The regulator should conduct tests of fintech players to say that they have depth of liquidity, they're resilient, and they're like solid enough that people can move their money through. But they should be given access. The more you give access, the more you will enable the first part of the conversation, which is in essence price compression, but at a better service point. I mean, these are trends that the entire industry is seeing. But unlike, I think, most of the innovation these days in the domestic space, cross-border, I think we're still in the thick of it, in the middle of it. There's so much more of the movie to play out.
Interesting. I think, Deepti, do you see this, need? And India is one of the most difficult markets to send money out. There's so much of paperwork. There is regulations that are around it. Do you see a demand that is coming from SMEs whom you sort of cater to in terms of simplifying that whole process? And I'm just dipping into what Abhinav started with, where people are ready to pay for convenience. Today, an SME is lost in terms of how to get a very simple thing done, right? If I have a sales guy, working somewhere, I just need to pay his payroll. It's a challenge and nothing but a miracle to have that processed, in no time, month on month, right? Do you see this demand coming from the segments that you cater to?
Yes, we do. So, for example, like I'll give you an anecdote here, right? One of our customers who sells online on Amazon in the US, right? So they needed to make some payments to Amazon for packaging their stuff. So basically, they sell the stuff, they send the stuff from India to there, and there they have to get it packaged in Amazon's warehouse. For some strange reason, Amazon does not allow credit card as a payment mode, or maybe because of that, there's a cost attached to accepting payments on cards. But they don't accept credit card for that particular payment, and they want it to be paid directly, right? So these guys came to us and said, "Hey, can we use the credit card's limit to pay them?" And we did not. That requires a lot of paperwork with the banks to get that going, right? So what our vision is to help businesses move all their spends on our platform. Now, when it comes to cross-border payments for businesses, that becomes tricky because of all the long forms, etc., that need to be filled in. So on a credit card, you can pay, right? But if you're not using the card platform, then it becomes hard to pay. So that's a little bit that it'll be great if that can be streamlined in some way. But I guess right now it's difficult given the regulations.
I think we are in the last few minutes of the conversation. I'll probably take one of the audience questions to Abhinav, where there is, and I'll also sort of color it with my own sort of question that I had. Abhinav, you've seen a lot of the customers, and you've been operating in a segment where you sort of evangelize the assisted sort of commerce play, right? So people who came to your outlets for doing one service, you ended up offering them a lot more. Do you see the same habit forming thing happening there? Is it allowing consumers to move away from a cash sort of model to something that is there on their phone? Are people even experimenting it, even if if it's an assisted mode? Is there a shift in habit that you're seeing, because that will then allow them to do it by themselves at some point in time?
Sure. But again, I'll reiterate, this shift is going to happen.
Yeah.
It is a matter of time, and it is, I guess, rather than organizations like Echo continuing to, so we are taking a step back. We are no lovers of cash. Rather, we want to help people who are earning in cash to actually get certain, transactions more digital. So the way this particular space has evolved is with assisted transactions. And if you go back about 3 years, what we used to witness is that not more than about 30 or 40% of people who would walk into our stores had smartphones. So even creating user experiences over an app was very difficult for us. But that's not but that's not true in 2020, right? And as a result of which, I think I can't, just by having an app experience or getting them to do things themselves, do not change the mode in which I get my wages. So they may continue to get their salaries in cash, and that's a different problem that one's got to solve. How do you convert salary payment from a lot of these MSMEs to their workers digitally? But let's say if they do get cash as salary, how do you kind of motivate them to rather than remitting them? Imagine you kind of cash into a bank account, but with neobank and all the opportunities open today, you can actually cash into your bank account and then use a far more sophisticated experience on your mobile phone to kind of remit the money and then start using other payments and modes, etc. So, as far as Echo is concerned, our positioning is that while we continue to do what we do, but I think we definitely want to play a pioneering role even in the conversion of this user behavior. I think all the pillars are absolutely there. There's been certain amount of hiccups because of demonetization and COVID, which probably in total probably has pushed us behind by a year and a half, specifically for this target segment. But I think this is an eventuality. This is going to happen. It's just a matter of time where people will start to innovate in this direction.
Fantastic, fantastic. Abhishek, if I can just get your closing comments on where do you see the payments evolve the next 5-6 years? You touched on a number of things in your earlier comment, but 5 years out, if I have to zoom out and see how is the payment business going to look like? Do you have like a bird's eye view on that?
So, I'm no oracle versus whatever happening, but whatever I'm seeing in the market and the way things are, one is mobile, which is already there. That is going to be the starting point and end point of any and every transaction. I don't think feature phone is where the world would move to. It will be feature phone actually moving to smartphones, and the cost of smartphones will come down, and infrastructure will go in the phone direction. So that's one clear direction. The second is cards are passe, so tokenized versions of everything will happen, and that is going to take things forward. And funding sources. So when today we call a funding source from a payment gateway perspective, it's either a prepaid, it's a credit card, debit card, net banking, UPI. Those are the funding sources. You will start seeing funding sources from line of credit to even possibly a fixed deposit line as a funding source. So the funding sources concept will dramatically change from what it is today. Increasingly, payments company will evolve to say that they are technology companies, they're not payment companies. So fraud management, risk management, those or business, like you talked about loyalty, those things will become very, very obvious. And it'll going back to basics. So something as basic as reconciliation, which everybody has offering today, but reconciliation across multiple. So there is a payment gateway, there is a POS machine, there is a QR code, there is cash which is getting deposited, there is a bank account. How do you get reconciliation? And then there is a corporate credit card and so on and so forth. How do you get reconciliation across some of these things? So that this is the going back to the basics concept that everybody says that reconciliation is the first thing, but it is still very complicated. So going back to those basics will be where things will progress. And just like domestic money transfer is becoming ubiquitous and very simple and people don't worry about it, I think the international side of it will get added to it from an Indian context perspective.
Interesting. I think we have a business that operates in the Middle East, where we see exactly what sort of Abhinav articulated, and I can see Abhinav, Murali, and Abhishek to some extent. All of these platform play coming together, where the consumers are getting blue collar workers, their payroll coming to a digital account. By law, they have to get it a prepaid card. And it's fascinating, those consumers are actually adopting to pushing that money back to their families, directly from the mobile, which until like a year ago, they used to queue up into a UAE exchange or one of these counters to actually deposit. They used to get, for the last decade or so, they've been getting it in the prepaid card. What has shifted is that people would get the money into their card, they'll go to an ATM, withdraw that money, go hunt for, the best deal in town, right? Every Friday, you'll have these, blue collar workers going around town, figuring out where can I get the maximum sort of rupees for the, every dirham that I send home. And they used to, if there are like 5 people from a village, it used to go as one transaction because they could hunt for a larger ticket size in a deal, right? It's fascinating that in less than a year that has actually moved to the mobile. People are now actually seeing rates from different players and originating the transaction. In many ways, that's what happens even in the domestic money transfer space, right? Where they get the salaries in cash because there's no overarching regulation to be paid into a bank account. And they just go, value hunt and send that money from wherever they are sort of most comfortable with. Right? That transition is happening, and people are already, and it's fascinating that whatever a white collar worker could get as rates and competitive offers from a platform like TransferWise is already percolating down to somebody who's sending sub $100 in payments or monies back home almost immediately, right? I think we had like a great conversation. I think
last point I want to kind of add to this particular piece, which is this about regulation.
Right.
What has happened with Ant recently is also a messaging to the entire world that, who do you light touch, full touch, what kind of regulation and what kind of connection you want with the regulator. And that's something which in the next couple of years will change dramatically. A lot of players are outside of the ambit of the regulator. And we're talking about working with banks or supporting banks and working with that particular mechanism. It's not going to be the case. So if you are working with banks, but you are a serious player, a substantial player in the financial system, there is a very high chance that you will be brought into the regulatory world. So a lot of us will need to be ready for that particular piece. We've been enjoying some arbitrage because of it, and we've been crying hoarse about the fact that we don't get the same benefits as a bank or other people do. But I think that change is also happening, which will also be very interesting to see in the next couple of years.
Yeah, I think Gateway is the first one to sort of come under that ambit. I'm sure the other segments, other ecosystem partners will have some kind of regulations coming up. Yeah, I think we are completely out of time. We couldn't do justice in 40 minutes, but I think we had an interesting conversation with the panelists. We're completely out of time, so we'll probably sort of wrap here. I just want to thank the panelists for their insights and the time over this conversation.
Thank you. Thank you, Madhusudanan.
Madhu, you were great. Thank you so much.
Thank you to all the panelists for being a part of this amazing panel. And thank you to the audience for those questions to make this session so interactive. We will soon join you with another session shortly. Please stay tuned. Thank you.
All right. Thank you.